Hey there, this is Andrew, the creator of the strategy Simple and Short. I'm going to make a quick video today to just look at the tolerance parameter. If I were to look at parameters here, Simple and Short has this tolerance parameter. And it'll also give you a good idea of how some of the developers backtest their bots and some of the things, at least that I particularly look for. A couple things. One, I struggled a little bit with the term tolerance and what I was going to name this field. You can see here that I've got a little explanation of stability. And stability is somewhat one of the factors, but part of this is also a little bit of what size waves you're looking to ride, right? And as you can guess, if we look here, you can see some of these smaller waves in here, and then we've got some larger waves. So the goal is to get on these waves, and obviously you want the bot to sell when it looks like it's dropping. You don't want it to sell too quick. You want to wait to buy until you're confident that it's moving up. So one of the things I try and look at are what are the waves that I want to ride, and the tolerance is a little bit of how long do I wait until I buy and how quickly do I sell. So you can see here that I started this bot with 1,000. I actually gave it 1,000 in USD to start. I gave it full access to 1,000 in the portfolio. I did not say to just buy. I told it to wait and figure out when is the right time to buy the first time. Told it my fee rate. You'll see that got a lot of good outputs that took care of all the fee calculations. In this case, I told it not to sell on stop. Typically, I do say sell on stop, mostly because I'm worried that if something were to happen in the system and everything were to shut down cleanly, that maybe if it weren't running, I'd prefer to not be holding anything and be at risk. Basically just cash out if something were to happen and I wanted to stop it myself. Though I've never heard of that happening and don't anticipate that to happen with Cryptotrader. So the tolerance, this is what I allow you to a little bit customize how big a waves you want to ride. Now there's actually some internal logistic that takes that tolerance and does some factoring and some looking at whether or not you're going to lose or win, and it actually changes the decision process around it. But the way that I set this tolerance, outside of knowing that there is kind of some secret sauce in there, is a little bit about the percentage of the size of waves. And then the percent to leverage, this is really, if you've got $1,000 in there, obviously you can't use all of it. You've got, depending on the trading platform that you're on, you've got various fees associated with it. So if you need to account for those fees. So I won't let you put more than 99%. Typically, like Coinbase is a quarter of a percent, 0.25. Bitfinex is 0.2, depending on what type of trading you're doing. So anyway, these are the various parameters. And so one of the things that I was noticing and why I'm even doing this is that with the growth of the price of Bitcoin, you can see here it was down in the 600s and 400s prior to that. Actually, it goes back more to 200s if you look a year back. One of the things that's happening is that I noticed that these waves are not growing proportionally. So they do a little bit, but with as much growth as we've had, they haven't really quite kept up. And what I mean by that is, if I were seeing at $500 a coin, if I were seeing $50 waves of up and down were kind of the norm and what I wanted to target, well, at $1,000 a share, if it were moving proportionally, you think all things being relative, that you'd get now $100 waves. And they're growing a little, but not at the same rate. So some of that is that, as the price grows, so does the natural stability of Bitcoin. At least this is the assumption that I'm operating under, and a little bit of a reason as to why I believe this is happening. So I started to notice that, I had recommended 0.09, and I started to notice as it grew that I had missed an opportunity to have a win because, I was thinking, well, I need to make more before I get off this wave, and this wave was a little bit too small. I should see something behind it, and it really just was that it didn't grow proportionally. So I was thinking, well, maybe I need to change it. So what I tend to do when I tend to think that, I'm going to use the backtesting to prove that theory out a little bit. And so what I can do here, you can see that I've pre-run this. I've got my logs now for my output. And this was running the 0.09. So you can see here that here are my trades that happened, started with $1,000. And you can see I built up my equity when this ended was $12.44. So I had grown $244, 24%, a little over. That's after the $48 in fees. You can see I won 5 and lost 3. So one of the things I tend to do when backtesting like this is I'll take a little snapshot of what I'm backtesting, because it's hard to sometimes remember some of the granular details. This just helps me compare side by side a little bit better. And then I'll go rerun it over the same time period with different settings. I do get rid of the trading fee here when backtesting because Simple and Short, one, does calculate it in for me, and I notice, depending on the market that I'm using, that the fees actually operate a little bit differently from market to market on which side it buys from and sells from, and it was the easiest way for me to standardize all my testing. And I built it in so that it calculates it for you so you can see what you're paying and basically what it equates to in the grand scheme of things. So I don't do that to try and increase what looks like profit. So now I'm running it over this time period. We're going to get a chance to see the difference here in the output. So you can see I've now won. Oh, actually, I forgot to not sell at the end. Let me rerun this quickly. I apologize, but what that did is that equated to me losing at the end. You can see over here that it actually did a sell on the way out, which counts for more fees, and it gives me an extra loss. So let's, even though I'm sure it's pretty minute in the overall grand scheme of things, let me set that to -1 so that it doesn't sell on the way out. Everything else will be the same. Luckily, these backtests are fairly quick. One of the things I really love about the Cryptotrader platform that's provided is the ability to go backtest, look at these graphs in different ways, look at different markets. I'd say there's a couple things to note here before we even look at the differences. One is you can see that, if I were to show you, which we'll look at here in a minute, a larger graph over time, the majority of time is a little bit more flatline like this, right? And you can see that, I hear a lot of times, hey, I turned on my bot and it hasn't traded in a couple of days. These bots take, the more movement that happens, the more they buy and sell. So these big spikes, you see a lot more buying and selling movement here than over here. And you can see there are times where there's, a good week or two where the market was just completely flatlined. You can see even the little trade volumes of the highs and lows, or I suppose those aren't volumes, but those are the high-low indicators, show that there really wasn't a lot of movement in here as compared to over here where you've got a whole bunch of stuff going on. So, don't always expect your bot to just buy and sell like crazy. So you can see here, though, now, I've gone up to 33%, made $339, and where the instrument itself grew 25. So now I've outgrown even the buy and hold, gone up to an 80% win ratio. I mean, these are all worse. So you can see here, I took one small loss on this one early on. Just, some of this is a little bit of bad luck, so to speak. I turned it on right before down curve. It just kind of slightly went up. It said, hey, it looks like it's going up. It bought and then took a pretty significant little dip. You can see from there, it really followed a similar pattern through here. Made a good win. You can see here it sold a little bit quicker to try and win on this one, and then bought and hold all through here the same. But one of the things you'll notice is, look here, it actually got out quicker and bought in quicker on the next wave. But I can see that this does seem to be a little bit better, particularly as I get through here. And I can see, right here where this was a decent loss that happened that I didn't get on this other side. So, this is telling me, I think, as times have changed and as the price has increased, that I think bringing down or keeping that wave size is about right. So as I mentioned before, just kind of some things that I look at. I'll go back and switch it to a daily graph and go back further in time. This, if I had done this hourly, for instance, it wouldn't allow me to see the graph. It would tell me there's too much data. But you can see here, if I take a little bit of a larger scale and go look at things, I could hone in on different places and test. And this is, what I did before is I took long periods, I took short periods, I take some of these little spikes through here, like we can see there's this, like June 1 through, let's see here, we would go to maybe like 8-1 or 829, right? Push this back to hourly. We can go look at this last bubble, and it's that these were the type of things that I had to look at before, and I did this with both with BTC and Ethereum, and kind of said, okay, what's the right amount for each one of these that seems to, in the long term and in the short term, which rates get the best. And one of the things I've started to notice is it's really hard to take a 1 year view and say, well, I want this particular rate to work for a year. Because like I said, the market changes, it grows, if the price doubles, things are no longer the same. So I think these numbers need to constantly be refined. But, I could just go through here and do similar type of exercises. I always try to give it an even 1,000. It makes it easier for me to just kind of see and calculate and see that things all line up. And I can run it with different rates. I'm really starting to think, actually, with Ethereum, that I don't want to ride all these small waves anymore. I think it's such a bumpy currency. And some of it too is looking at the different currencies. So you can see here, this got 15%. And I'm fairly certain that if I went and ran this at the 7%, that things are just not going to come out as well. It's going to come out probably down in the 1-2% range, just because these, based on the price, it's going to be getting out a little bit too quick. So, I think it's good to take any strategy that you've got, do these type of testings, test them at least once every 3 months, make sure that the settings have changed, particularly if there's a big change in price movement, or any dynamics like around volume. I mean, think of what happening in the Chinese market over the last couple of months with all the volume things that were happening there. These things greatly affect the behavior and sometimes the settings that you need to have. I think I'll just maybe glance at USD, go back to 1 here, 1229, daily. One of the things for Ethereum that I look at is, if you look at this over the daily over that long period of time, you can really see that there's a pretty big difference in this graph from what you have or what you would expect with BTC, where it's moving up and to the right. This really is about riding the waves. And you can see with a lot of this downhill, and there's just lots of choppiness in it, but I've gotten to the point that I really just go, okay, I really only want to ride these big waves. Where Bitcoin, I'm a little bit more, if I were to switch back there, I'm a little bit more confident in the fact that it's going to be an up and to the right movement on the graph. We've seen this, and if I were to go back to 2015, which Ethereum doesn't quite go back that far, at least not for the graphs here. If I were to go back further like this, it's just that constant up and to the right movement, which tells me I want a little bit more like the buy and hold. I want to ride the waves and capture some of that good. And I think for me, one of the other big things with Cryptotrader is just giving me a little bit peace of mind, where we have seen some of these big dropouts that, I'm not going to be caught holding the bag if there's a big dropout. I tend to look at even what happened here in China if we were to zoom back in. We took a pretty big inflation and a pretty big drop, and I tend to just want to feel like I'm not only retaining as much of that, but I also like the peace of mind of knowing if I went on vacation for a couple of weeks, that if there were some massive drop in the market for some reason, that the bot would sell and put my money into a currency where I know that it's safe, and until I can make a decision of kind of when to get back in the market or when it decides it's back time. So I hope this video was useful for understanding a little bit more about simple and short, back testing, and some of the different strategies out there in the market. I know I didn't talk about others, but obviously during these flat times and these waves, there's some other strategies that trade much more aggressively than simple and short, trying to buy low and sell high more quickly. But this is at least what I found to be a little bit more of a way that is not, it's funny, I laugh at 20% growth over a quarter. Not calling that quick. I mean, to me, that's the fastest return I've seen in an investment in a long time. But I think others are trying to do quicker. This is also shows you how you can use backtesting to go test these different strategies. It's one of the things I pretty regularly do as well, as I go out there and look at what other developers and strategies that they're making, and quite honestly, take a good hard look at what they're doing as compared to mine to figure out. I think diversity is always good. Put a little in some other ideas. You don't want to put all your eggs in one basket, but obviously, if they're doing something great, I want to be a part of that too. So that'll be the last thing I leave you with today. Thanks for joining, and we'll talk to you again on the next video.